Stock market. Oh, man. Woo!
That has no applicability to this video, but I just wanted to play that. Merry Christmas, everybody. In this video, we're going to talk about a very special stock to my heart. And you want to know why it's special? Because somebody paid me $50 to talk about it. Merry Christmas. Hopefully you're enjoying time with your family. And while you're doing that, I'm making a YouTube video, which is it's very sad and depressing. Anyway, we're going to cover this interesting stock known as Paysafe. Take a gander and let me know what you think this company does. Paysafe. Kind of sounds like PayPal, right? Well, PayPal is one of the many thousand other companies like Paysafe that processes transactions on the internet. Have you ever heard of a more unique and breakthrough company than Paysafe? Well, let's go ahead and check out what this stunk is all about so I can get my grift bucks. So Paysafe Limited provides a payments platform for merchants. Okay, let me read that again. Paysafe Limited provides a payments platform for merchants and consumers in the entertainment sectors. It enables businesses and consumers to connect and transact seamlessly through capabilities in payment processing, digital wallets, and online cash solutions. Have you ever heard of that in your entire life? That's crazy. Okay. So it operates mostly in the entertainment sector. We're going to see some of the clownish companies that they offer services to. Okay. So market capitalization is $739 million. This is a pretty tiny company on revenue of $1.57 billion. So this thing is trading for half of its revenue. Now you would think like a payment processor would be like hyper profitable, hopefully, ideally, and that it wouldn't trade for 0.5 revenue. What does PayPal trade for? Let's see. What is the price to sales of amazing PayPal My Snace Now? It's probably a lot higher. Yeah, even PayPal My Snace Now, which has gotten absolutely wrecked, trades at a price to sales of like 2 point something. Okay. So Paysafe, there's definitely a lot of pessimism. Paysafe. There's definitely a lot of pessimism built into the company. So let's go ahead and read some more. Trailing net income is $41 million. So over the past 12 months, they've cumulatively been unprofitable. Doesn't necessarily mean the future is going to be the same thing. Trailing EPS of negative 6.9 and a forward PE of 16. So basically, a lot of the analysts are saying this company over the next 12 months is going to be profitable because it has a forward price to earnings ratio. Let's see, what's the price target? This is always the most important thing, guys. Price target of $24.14 for this old payment processor. Let's look at the financials. Let's see what's going on with this company. So first thing I like to look at is revenue. It's barely grown. Okay, I think PayPal, the old dinosaur, is growing its revenue faster than Paysafe. That says a lot. It's got a pretty high gross profit. So at least from the top of the income statement, they're profitable. And most recently, they've actually had positive operating income that has increased. Well, there was one quarter where it dropped a little bit, but it's increased basically every single quarter. So now they're profitable from an operation standpoint, which is good. Okay. That doesn't mean they're profitable on the bottom line because operating income doesn't include interest expense and taxes. But at least they are showing some positive signs from operations. We see interest expense of a pretty significant amount. Okay, so they definitely have some debt. Let's see, how much is interest? So interest is roughly 10% of their revenue. That's a lot. they probably have a lot of debt. And they've been profitable on a GAAP basis for the last 3 quarters. Their margins, gross margins in the high 50s, but going down. You can see it's slowly trending down. That's because of competition. The payment processing space is highly competitive. So their gross margin has been going down. Their operating margin has been trending up a little bit. And their profit margin overall has been negative, which is very weird because, oh no, This is their pre-tax income. Their net income, they're unprofitable. So after interest and taxes, they're unprofitable. But overall, they're showing some improvements in their operations, which is a good thing. Okay, but there's something not right with this company if it's trading so cheaply and it's turning to profitability. What is it? It's probably the debt. Okay, free cash flow. We can see free cash flow is negative. Why is that? I don't know if they have positive operating cash flow or if they're spending a lot of capital expenditures. Let's go look. We'll skip the balance sheet for now. Let's look at the cash flow. So they've had negative operating cash flow for the past couple of quarters. They had a huge spike in 2022, basically during the clown market, and now cash flow has gone negative. So they've not made positive cash from their operations for the past 4 or 5 quarters. Okay. On top of that, they have to make capital expenditures. That's spending on property, plant, and equipment. Tiny acquisitions here or there. Last big one looks like was in 2022. Changes in investments irrelevant. Now, the funny thing is they have negative operating cash flow, and they've started to buy back shares. And I saw most recently, in their most recent report, they announced they're going to do another $50 million buyback. Why are you buying back shares if you're unprofitable? I don't understand that. Why don't you pay off debt? Okay. On top of that, we can see that they're paying off debt. So they're trying to get out of debt. But if you have negative operating cash flow and you're doing capital expenditures, you're going to run out of cash eventually. So I don't know why they're buying back stock when they could just be putting every dime to paying off debt, but whatever. I guess people like it when it pays off debt. Okay. So, we're going to look at the balance sheet because that's where I think the big red flag is, but it usually doesn't look good on this. It's hard to tell on this platform. Okay. So historically, the price has dropped massively. So there's always a reason that these stocks drop. I mean, look how high this stock went. This thing went up to $226 and now it's $12. Ooh, man. What are we going to do? So I looked at the company's website. So here's the leadership, and they're not diverse, which I do not like. But we can see that this guy is the CEO, Bruce Lothers, and he joined the company in 2022. And he comes from I think his background is in something similar to this, but he's basically trying to focus the company. He eliminated some business segments. So instead of 5 segments, there's now 2, basically digital wallets and payment processing. And they're focusing on, improving the company. So we'll see how that goes. All right, let's go look at the third quarter 2023. Make sure I'm sharing my screen. I always get paranoid. I am. Okay. Let's look at the third quarter earnings presentation, November 14th, 2023. Blah, 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 blah. So here's the summary. Payments volume has increased 8%. I think that's less than PayPal. Revenue has increased 8%. I think that's roughly in line with PayPal. So PayPal, this large, massive company that has dropped massively, is trading at a higher multiple and is growing their revenues at the same pace as this company. Okay. We see adjusted EBITDA, which is a massive warning sign. If you see this, you're dealing with an unprofitable company. Adjusted net income and net leverage of 5-to-1. So they're highlighting this net leverage because I have a suspicion that they have a lot of debt, or at least a lot of debt. So we'll see. So they're growing. Blah, 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 announcing a 50 million share repurchase program. Once again, why are they doing that? That makes no sense to me. If you have negative operating cash flow for the last 3 quarters, unless you think you're going to be doing amazing in the future, I don't know why you're buying back shares. Pay off your debt. Freaking clowns. Okay. So here's some more. Oh my God, we're so amazing. Let's go look at some of the businesses that they deal with. So they have iGaming and video gaming is 36% of their business. FinTech services is 33%. Travel, leisure, and entertainment is 22%. And retail is 9%. Now, do you recognize a lot of these companies? Fanatics Sportsbook, Peon Me, Revolt, Leo Vegas. What is that, Norway? Underdog Fantasy, Copa Airlines. With vendors like these, I'm sure they have very stable clientele, right? These are what is this? These are like clown vendors. One thing I'd be worried about is I don't even know who these vendors are and if they're going to be there in the next 5 years. Because if they're not, that's going to hurt this company's business because they're not, making money off the transactions and wallets and stuff. So these are some of the big deals they signed in Q3. And if you look at the companies they deal with in North America, let's see some of these Chad companies. DraftKings, okay. Caesars Sportsbook, ESPN Bet, okay. I'm not a gambler, but a lot of these companies I don't recognize at all. Chumba Casino, wow. These are some very strong clients we got here. So this is the kind of companies that Paysafe is dealing with. Okay. All right. So, they're showing digital wallet transactions are increasing, revenue per users. And there's some positive signs, but this is not like an explosive growth stock. And they have interest is 10% of their revenue. That's a lot. So let's go ahead and look at the financial statements. Let's see. Okay, so we already saw the other things. Let's look at the balance sheet. Okay. So we got $226 million of cash versus $260 in December 31st, 2022. So they got, some cash. They have enough cash to buy back, but I don't think they should be doing that. Customer accounts and other restricted cash of $1.2 billion. Now, this is basically like cash customers' deposits into the wallets that they offer. So this is not their cash. At least I hope they're not using that cash. This is held on behalf of the customers. Now, you'll notice they have customer accounts and other restricted cash, and then they have funds payable and amounts due to customers. So there's an asset because they're holding the cash, but it's not really their cash. So there's also an offsetting liability. Now, one thing I noticed is customer accounts and restricted cash have dropped pretty significantly. So what that tells me is that customers are pulling their money out. They had $1.86 billion of customer deposits, cash held in trust, basically, at the end of last year. And as of September 30th, they have $1.29 billion. So that's roughly a 30% drop? That's a pretty significant decline. So people are pulling their money out of this company. Okay. Receivables have barely grown. Settlement receivables are down. Prepaid expenses are up. Total current assets are 1.9, but the really only liquid assets are the 226 million and the 163 of receivables and the 140. So they have roughly 500 million of liquid assets as of September 30th, 2023. Now, short-term debts, let's see what they have. So they have accounts payable of 225. They can pay that. Short-term debt of 10. That's really nothing. Funds payable, we already talked about that. That's the liability for the customer deposits. So overall, their total current liabilities are 1.7, but it's not as bad as it seems because a huge chunk of that liability is short funds payable and amounts due to customers. So it's not the worst current asset versus current liability thing. Let's look at long-term assets. Okay, we got some deferred tax assets, which basically means you paid more taxes now, so you're going to save taxes in the future. It's a complicated calculation. Basically, it's like tax savings in the future because they didn't get as many tax write-offs now. Property, plant, and equipment, they've grown their PP&E, but it's only 18 million. It's not a lot. They don't have a lot of property, plant, and equipment. They have a little bit. They have leases, 25 million. Here's the problem. Okay. Intangible assets, $1.2 billion, and Goodwill, almost $2 billion. So they have basically $3 billion of their assets are assets you can't touch, you can't caress, you can't fondle. It's just $3 billion of intangible assets, especially Goodwill, which is just from acquisitions. Okay. So out of the $5.27 billion of assets, $3 billion are intangible. Now, if we look at their debts, they have $4 billion of debts. These are real debts. Okay. So if you look at their tangible assets versus their tangible debts, it's pretty bad. Okay. They're actually underwater if you exclude Goodwill, which is just from overpaying for an acquisition, and intangible assets, whatever those may be. And we can see, look at this non-current debt. So they basically, it looks like what probably happened is they piled on a bunch of debt, $2.5 billion of debt to acquire another company is what it looks like. That's the problem. They have a huge amount of debt relative to their tangible assets. You better hope that acquisition works well for you, buccos. So that's why they have high interest, and that's why this balance sheet is not great, because they have a lot of debt versus tangible assets. It's like saying, I bought a car for the car was worth $5,000, but I paid $20,000 for it. So I have $15,000 of Goodwill because there's something about the car that makes it worth more, and $5,000 of actual asset value. But I took out $20,000 of debt for a car that's worth $5,000. But it's a good deal. You know what I'm saying? That's basically what happened here. Shares going up a little bit. Obviously, they're issuing shares. Accumulated deficit. This company's lost $2.2 billion over its lifetime, and accumulated other comprehensive loss, much less significant, of 36. That's just like, foreign currency translations, stuff like that. So overall, this company's balance sheet is just complete ass, and that is not good for the long run of this company. Now, I wonder when that debt matures. Let's see. I got to find when the debt matures. That's what you need to pay attention to, because if the debt starts to come due very, very, very soon, you're in trouble. They're really in trouble. And of course, this is another sign of a clown company. On December 12th, 2022, we effected a 1-for-12 reverse stock split. So when a company falls so low, they have to do a reverse stock split so they don't get delisted. This thing is a turd. Okay, the clients, I don't like the clients. The clients are clown clients. They have massive debt relative to their tangible assets. They're buying back shares when they're cash flow negative for, I don't know, to trick clowns into buying the stock. I don't like this company. And then on top of that, you just have the whole, oh my God, there's so many competitors in this industry. Like, how many payment processors are there going to freaking be? Let's see. Oh, look, see, they've already recorded an impairment. Oh my God. So whatever they acquired, you could see that in between 2021 and 2022, they wrote down $1.1 billion of goodwill from Merchant Solutions and $723 million from digital wallets, for a total write-down of $1.8 billion. So they've been writing down that goodwill because they made a crappy acquisition, and they discovered that the future cash flows from that company they acquired are not going to be what they thought they were going to be. So they wrote down the goodwill. They made whatever they bought, they made a huge mistake, and they packed on a lot of debt for that. But, oh, bro, it's okay. I mean, we'll just, we'll figure it out. Okay, here's their intangible assets: brands, software development costs, customer relationships, and computer software. Wow, it's really strong assets you got there. Try to see the debt. Here we go. Okay. Usually they have like a debt schedule, so they show you when it's going to be due. Okay. Facility maturity. Well, it looks like their maturities are out there pretty far. Okay. Yeah, I got June 28, 2028. Okay, so their debt is not, a lot of their debt's not due for a long time, it looks like. But eventually, if they don't fix their crap, it's going to catch up to them. You can see the maturity dates here. So it's not like they're imminently about to declare bankruptcy, but it also ain't too good either. Here we go. Here's what I was looking for. Maturity requirements of debt. So next year, they'll probably be able to pay off that. 2025, they got to pay off $85 million, which is going to start to push it because they don't have a lot of cash, so they'll probably have to refinance. And then if they refinance, they'll have to pay more interest probably. But the vast majority of their debt is in 2028. So this company, they got some time. They're going to be around for a little bit before that big debt bomb starts to approach. But 2028 could come faster than you might think. And then that's when the stock could get freaking wrecked. Okay. Like I said, I don't know why they're repurchasing shares, but that's my thoughts. There's too many risks with this company. It's a highly competitive industry, way too many risks. I don't know why you would want to buy something like that. Let's see. Oh, we got Capital Mindset in the house. Getting the clap on Christmas. That's right. You got to get an STD on Christmas. If you don't, you're a loser. Merry Christmas. Getting my Christmas bucks. Just logged on. The first thing I see is shirtless strong. Is there no better Christmas present than seeing me shirtless? Come on. I mean, just be honest. You celebrate Christmas by analyzing stocks. I wouldn't even call it stock analysis. It's just like, you look at some of these companies and I don't get it, man. Why people buy this stuff? The Christmas spirit is strong. It is. I wish I had a Santa hat, but I don't. I'm starting a company called PayFriend, and in Mexico, it will be known as PayAmigo. I predict it will be $1 billion market cap. Honestly, and if you were in the right clown market, it probably would be $1 billion market cap. Lose money, buy back shares, have massive debt on a failed acquisition. What could go wrong? Of course, bro. Okay. Bro, working on Christmas. I don't even consider this work. I don't even know what this is. Grifting. Oh, Fabio's got Paysafe. Uh-oh. What did I miss? Did I miss the bullish thesis? Trust me, bro. Paysafe is the new Visa. If they work with DraftKings, I don't trust them. Fintech is the future of everything. Nothing else matters but fintech. Get on board. You know, I may put in a buy order. Is the market open tomorrow? Basically. Paysafe lounges. Let's see. As a high-income earner, I make sure I remain in crippling debt with SoFi personal loans. Dude, I get so many offers for those. Just get a loan, bro. I mean, what could go wrong? Help us grow our balance sheet so we look like we're growing our business, or we're just handing out loans like candy. PayPal will cure cancer and become self-conscious or take over the world currency. Oh, my God. PayPal is a growth. Well, relative to this thing, it is a growth company. I mean, this tiny little payment processor is not growing as fast as PayPal. Like, that's pretty sad. Let's see. I try to tell you PayPal's still growing branded checkout at 6.5%. Yeah, it's just the relative analysis. This company's a turd. Let's see. Strongman focuses too much on accounting. I do what I like to do. Okay, I can focus on whatever I want. It's what I want to do. It's my channel. I can focus on growth stocks. Oh, it's growth. Oh, buy it. You guys probably like me more. Nobody gives a crap. Oh, you will when you have a massive impairment. You will. Let's see. This company either has amazing 6.5% growth like PayPal, or it's trash. 6.5% is cheat code. This has 8%. So I guess that's trash. Let's see. I probably own this at VT. Let's see. Do you plan on revealing your 300K YouTuber? Yeah, I totally made 300K. A little bit less, but, you know, roughly 300K. It's so easy, bro. Now, if I did make 300K, oh, boy, I would not be on YouTube long. I would ride off into the sunset. Long-term debt. Yeah, who cares about long-term debt? $1.5 billion that's coming due in a couple of years, and they have negative cash flow. Who cares? But let's just buy back shares, you know. Let's not worry about our debt. Accounting is a scam. This is why price to sales is the best measure. I agree. So will the stock go up? You guys be the judge of that. I think the market is going to rally to next year. I'm taking profits. I'm a genius, bro. Buy my course. I never take profits. I only take losses. It's true, actually. Glorious traps. Yeah. I just got nice traps, dude. It's genetic. Strongman, is it time to buy a firm after this Christmas spending? It's already priced in. Who knows? Maybe I'll look at a firm. Meet Brent's old stock. Hi, I'm from France. Thanks to save me from the grift. I'm 95% invested in European VT. If you win 200K, will you invest this in one shot or will you DCA it? If you DCA it, on how many months? Honestly, I would probably, me personally, I'd probably just lump sum it in. This is what I would do. That's me personally. But if you lump sum, there's always the risk that you could be, the next 10 years could be flat or negative returns. So you can't get butt hurt if you lump sum in and then the stock market stays flat for a decade. This man screwed me over. But like, I'm not selling it for 30 years, so I really wouldn't give a crap. But that's my personal opinion. If you DCA it, I mean, that's just really that's your judgment, man. With DCAing, I mean, either you know, if you lump something, the market goes crazy next year, you're going to miss out on a lot of gains. So that's just the risk you take. Merry Christmas. Hey, handsome. Damn, you got some traps too, boy. I want to come rub your shoulders. Fave finance books. Stop being a broke loser. That's a book I've heard about. Go check it out on Amazon. I'm underwater on PayPal. I think my cost basis is 175. Should I dump it now, not throw good money, or should I DCA? Only about 4K invested, or should I bail? I know what I would do in that scenario, but look, you just gotta, like, what do you want from your investments? Would you buy the stock now at its current price? Do you think it's a good buy now? Do you think it's worth 175? Did you make a mistake? If you made a mistake and you think you were totally wrong, maybe get rid of it. Honestly, I tell most people, just get rid of everything, put in VT. But I don't know, man. I can't tell you what to do. If you bail, you'll miss out on the next meta move. That's okay. Look, keep one share. There you go. Then you can start a YouTube channel and see how smart you are. Why would you leave YouTube if you make 6 figures in ad revenue? It's like putting money on the table. Well, I would probably stay for a couple years, throw it all into VT, and then I don't know. I don't know what I would do. Let's see. Are the market makers holding us down? Yes. Every time we lose money, it's the globalists and it's the hedge funds. I held TQQ for a year and it's up 80%. Long-term triple leverage does. You held it for a year. Long-term leverage does work. No. Think about that statement. Is BlackRock going to buy my house and kick me out? Hey, if they paid enough for my house, I would let them kick me out. Like, yeah, you want to pay double what I paid? Deal. Let's go. All right, that's Paysafe. I don't like it. I like VT better. Paysafe is kind of a turd, though. The debt is not cool, and they pay 10% of their revenue in interest. Not good. All right, well, let's do an outro, and you guys have a wonderful Christmas. Cheers.
Holy smoke, is this ain't no joke, because I was literally about to go to bed.
Oh my word, look at that.
Wow, do we have a lot to get into here today.
Woo, 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 woo.